Hey guys, thank you so much for watching this video. Please give us a call if you guys are looking to improve your credit score, lower your car payment, buy a car, trade in a car. If you're looking to purchase your first home, if you're looking to purchase a rental property, we can help you. Give us a call today, 877-205-7771. Talk to you guys soon, and thanks again.
Hello everyone, this is Calvin Russell, CEO and founder of 850 Club Credit Consultation. Hope everyone's doing well today. Today we're going to talk about bad credit auto loans. It's been a while since I've talked about buying cars, with having bad credit. I hate to say bad credit. I'd rather say not the best credit. But the reason why I haven't done a video like this in a while, one, I try my best not to repeat the same content, as you guys know from my channel. But at the same time, I don't necessarily want to just focus on not having the best credit. We always want to make that transition too, but the main reason is because we're kind of going into the winter season. This is when cars start to give out. This is when your car has given you all it possibly could. And now we're at a point where we have to make decisions. But either way, let's go ahead and move forward on what the next steps are going to be. So number one, I'm going to put a link down at the bottom where you can actually reach out to this company. Everything's, of course, be online, and you fill out the application. And what they do is they forward that application over to the closest dealerships to you that work with your credit score type. Okay, so you could be under 650, under 600, under 500, or even under 400. They have dealerships that will work with you. Now, some things that people always ask me: will it be high interest rate? More than likely. I mean, the bank is taking a risk, obviously, if your score is a lot lower. Okay. Will I have to have a down payment? More than likely, unless you have a cosigner. Be prepared to put down $500 or more, depending on what type of cars they have in inventory. Usually, the more you put down, the nicer the car is going to be. Okay. Will my payment be high? Everybody's definition of a high payment is different. People are used to paying $700 a month for bigger vehicles, and then you tell them 500, it may not be a big deal. But people that have always paid $200 a month, 500 may be a crazy amount. So everybody has their own definition of a higher payment, but most definitely prepare yourself for a payment over 400. Anything less than 400, the car's got to be really I won't say really old, but the car's got to have a little age on it, or the miles have to be substantially higher. Okay, but again, the whole point of this is to understand the transition phase. We're not just talking about getting approved for a car because you have bad credit. We're talking about transitioning from having those bad credit terms, then improving your credit score, and then keeping the car, but now getting new terms. And that can be done by obviously improving your credit score, whether you guys learn stuff from this channel or whether you guys have our one-on-one consultation coaching package. But either way, our clients that we help, we notice right away. We can look at a monthly payment auto loan. I taught my team how to do so and say, hey, listen, it's time to refinance this car. And we help our clients lower their car payments. Of course, you have to qualify. The car has to qualify. There's a video on that you guys can search on the channel for. But either way, just because you have bad terms, I won't say bad terms, but just because you have certain terms that that lead to a higher interest rate, higher payment, so on and so forth, a lot of people forget that they can refinance that vehicle. Most banks will let you refinance, after 6 months. More than likely, you can't refinance with the same company that you financed the original loan with. Okay, so for example, if your loan is with Bank A, more than likely they're not going to let you refinance with Bank A again. Okay, because they already have your signature in ink. That you would pay a higher interest rate. It just wouldn't be a smart business move. So you have to qualify for another bank and they have to pay them off. So if your credit score goes up, you qualify, but then the car may not qualify. You can't make a bank, take a $20,000 loan on a car that you owe $20,000 on, obviously, but it's only worth 10. That doesn't make smart business sense, especially if the car gets totaled out or whatever the case may be. So there's a certain amount of negative equity that a bank is willing to take on. Average amount of negative equity that a bank may take on is anywhere between $3,000 to $6,000. But again, every bank has their own different guidelines. Credit does play a role in that same exact example. Now, number one is getting approved for the bad bad credit auto loan, but then number two, obviously, is going to be refinancing. But then there's another way to do that too, and that's through a personal loan. So for example, if you end up getting a bad credit auto loan, your interest rate's, I don't know, 23%, right? Well, let's say 20. That's a reasonable, but normal bad credit auto loan type of deal. Now, some people, they've never had double-digit interest rates, so 10 may be high for them. But normally, you're going to see people having 20%. So if they have 20%, and then their credit score improves. Let's say they're in the 4s and the 5s, it improves to the 6s, high 6s, somewhere in that range. And then, but for whatever reason, the car has $6,000 worth of negative equity. The bank says we're not doing that, and you don't have enough cash to make that difference. You could take out a personal loan. A personal loan may give you a 15%, 14% interest rate, but it beats the hell out of 20%. So that plays a major role in the rescue of getting new terms. One is trying to do a traditional auto loan refinance, but again, you must qualify and the car must qualify. There's a video on that in the channel. Or you can go with a personal loan and then of course take that same money, pay off the old bank, and now you're just paying the new bank. Okay, now you got the title in your hand as well too. And I know what you're thinking, well, Calvin, I could probably just get another auto loan since it shows that my auto loan's paid off. You could, but now you got two auto loans, so you don't want to do that. Okay, so hope I didn't lose you guys there, but either way, that's what you want to do. So if you're looking to get a car, your credit's not the best, there are places that you can go. And 3 is going to be the third option. That's where you can actually just go directly, with credit acceptance. Now, credit acceptance is not the same link that I was talking about with before. That's a little bit different. Credit acceptance, they specialize in very special cases of people that don't necessarily have the best credit. But you can try both, But again, don't get upset about the numbers necessarily. You have to understand your situation. Income's going to play a role. If you have a cosigner, that's going to play a role. Down payment is going to most definitely play a role. But you're not married to the car. You're not married to the terms. And you can easily change your credit situation and get better terms. Okay, it's easy. I tell people all the time, it's difficult to change your income, but it's easy to change your credit. To change your income, sometimes you have to, you got to find another job, got to hope they pay you more, whatever the case may be. But credit, you can most definitely either watch channels like this, work with someone like my company, or whatever the case may be, get a higher score, and then take advantage of that higher score. Maximize the higher score. That's what it's all about. So if you like this video, like it, you want to share it. And as always, be sure to subscribe, as we have nothing but great content on the way. And make sure you tell people about this video, especially if they're looking to get a car. You want to make sure they do it the right way. And again, it's all about expectations. You may not like everything up front. I always have to say it's short-term pain for long-term gain. It's going to hurt right now, but at least you got the goal accomplished of getting the car and then refinance out of it. There's always a way out of a situation, and credit will be the key to get you there. Have a good day.